Hi, Intermediate 2. In this video, we're going to go over the indirect cash flow statement. Remember, the only difference between the indirect and the direct cash flow statement is the operating section. So this particular problem is going to have you do separate transactions in BE 2220, BE 22-21, or BE 22-15. So we'll start with BE 22-15, and what the problem is giving you a balance sheet and an income statement. So remember, the first thing that you want to do is you want to take the difference between the prior year and the current year, and that change will go in your direct cash flow method. All right? So the first change that you see is accounts receivable. The prior year was 208, the current year is 247. For inventory, the prior year was 260, the current year is 312. For prepaid insurance, the prior year was 52, the current year was 26. Okay, so for the change, it's for accounts receivable was 39, and accounts receivable increased. We're going to do something with that in a minute. For inventory, the change was 52, inventory increased. We'll do something with that in a minute. The change with prepaid insurance, which is a current asset, was 26, and that decreased. Okay, so that's going to take care of your current assets. Next, you're going to work on your current liabilities. Okay, so what do they have? They have accounts payable and income taxes payable. So you're going to take the change from the current year to the prior year and write exactly what the change was. Did it increase or decrease? So accounts payable increased 39. Taxes payable increased 13. All right, let's put this cash flow statement together. It's asking for the indirect method, okay? All right, so let's go over here. And remember, we're going to start with the income statement. It's the indirect method. So the first thing on your paper is net income. We start with net income, and that is 143. Then we look for depreciation expense. Remember, we're going to find that on the income statement. We will always add that back in. Depreciation expense. Next, go to the income statement. Look, this won't be on every one, but I'm looking at the income statement, and here's what I can see. Gain on sale of equipment. All right, I have to put that in. I have to take that out of my net income, okay? So, gain on sale of equipment will be the opposite of how it would normally affect net income. So what am I going to do? I'm going to subtract that. So it's 26. I got that right from the income statement. All right, now I'm going to work on the changes that we went through in the beginning of the video. So we did the increase in accounts receivable. Remember, increase in current assets do not make sense for the indirect method. So if they increase, I'm going to show them negative. If they decrease, I will show them positive. Current liabilities make sense. If they increase, I will show them positive. If they decrease, I will show them negative. Remember, you have to know the difference between current assets and long-term assets, current liabilities and long-term liabilities. Okay, so I go over here and I put increase in accounts receivable, running out of room, and that is It's an increase, so I'm going to show it negative. Increase in inventory, remember, doesn't make sense. It's the opposite. Inventory increased, so I will also show that negative, whatever the change is. Decrease in prepaid expenses. Remember, a prepaid expense is a current asset. Prepaid, in this case, insurance. And it decreased, it's going to show the opposite, so that would be a positive 26. Increase in accounts payable. Now this is a current liability. This will make sense. It increased. So I will show that positive. Then I have increase in taxes payable. That's 13. Oops, running out of room. All right, let me draw a line. That's 13. And that's positive. So, you know, with your cheap calculators, add up your negatives, put the total over to the side, then add up all your positives, put the total over to the side, and then take the difference, okay? Remember, if your positives are higher than your negatives, your answer is positive. So, you'd start with 143 plus 65 minus 26 minus 39 minus 52 plus 26 plus 39 plus 13. So your final answer is 169. This is called net cash provided by operations. Okay? All right. Now, the next one is going to be 22-20. And it's going to ask you, it's going to have you look at the same problem that I pointed out, okay? And then it's going to say, what would it be if it's asking for the investing activity section? All right, remember, investing is long-term assets. So I see property, plant, and equipment. Okay, I'm looking at that. I also look at the bottom of the problem. I'm trying to see if they're telling me anything about this particular problem. Here's what it says. During the year, Simmons Products purchased new equipment for $195. All right, that's going to be an investment. And they purchased, that's going to be a negative. Investing and financing makes sense. Remember, if it affects cash, it will be on your cash flow. If it doesn't, don't put it on your cash flow. And sold equipment with a net book value of $26 for $52. Both events were cash transactions. Okay, that's good, but let me go back to this. It sold equipment with a net book value of $26. Yeah, that's great. For $52. I need the $52 only for the cash flow. I only care about the piece that touches cash. Here's what it also says. It paid any dividends declared. Okay, that's good, but I'm working on the investment section for this particular problem, so I don't need that because it's only asking for investing. All right, so now let me put this together. So I'm going to have investing activities, and I'm going to have acquisition. Acquisition is purchasing. Acquisition of equipment. Okay, this will be a negative. Be careful with your positive and negatives. This is a negative. Put that in parentheses. And then, disposal of equipment. Well, I sold the equipment. What did I sell it for? Cash. How much cash? I pointed that out. $52. Not the 26 they told me about. I care about the $2. And that is a positive number. Okay? All right, now I just net the two, and net cash used by investment, used by investing, was $143. Okay? All right, so that's how you do that particular problem. Now we're going to go to 22-21, and in this particular problem, they're going to have you do the financing section. All right, this one's going to be a little bit more difficult. I look down the bottom, and it says, both events were cash transactions. Okay, great, that was related to investing. It paid any dividends declared. All right, but it didn't tell me the amount of dividends. Simmons made no repayments of debt during the year, prepare the operating activities for the statement of cash flow, but this is now asking for me to prepare the financing section. All right, so financing is basically the equity, the long-term liability, and the equity section. All right, so for the operating section will be my current liabilities. If they don't tell me what the liabilities are, I have to go to the balance sheet and I have to figure it out. All right, so here's how I'm going to do that. Find your total liabilities, which are $559, and then find for the prior year, and then the current year are $650. Okay? You're going to take the difference between the two, and that is a positive 39. Now, they also told me in the problem that they didn't repay any long-term debt. So that change is solely related to issuing long-term debt. Next thing I'm going to look for, I'm going to find the capital stock. So I find the capital stock, and it was $221 in the prior year. In the current year, it is $296. Trying to read, $296. So take the difference between the two, $221 minus $296, and that went up, which means they issued more common stock. That went up 65. So that's that piece for issuing common stock. Please work with me as we're going through this. All right, now here's the difficult part. Let me go over here, and I'm going to erase in a minute. I'm going to draw a T account. Okay? I'm going to draw a T account, and I'm going to start with retained earnings. What am I trying to figure out? I'm trying to figure out dividends. X. This is dividends. What is it? They didn't give it to me. What did they give me? Well, let's go to the balance sheet. Let's find the retained earnings. Let's find the retained earnings. Okay, so I go, the beginning of retained earnings was $260. The ending retained earnings, or the current year, was $338. Okay? All right, so work with your T account. Retained earnings, remember it's an equity account. So the beginning balance was normal. It's $260. My ending balance, this is my beginning. This is my end. My ending balance was $338. All right, what other piece of the puzzle did they give me? And they'd have to give this to me, or I wouldn't be able to figure out the dividends amount. Okay? So what they gave me was they gave me the income statement. They gave me the income statement right there. The net income they gave me. So the net income I'm going to put in for another piece of the puzzle. I can add that. I'm trying to figure out the dividends. How do I do that? Take 260, add 143, and subtract 338. And that will give you 65. Okay? So remember, you're going to add these two. Add. Get your total, and then you will subtract this final number, this 338. And you will see that's 65. Double check your numbers. Take 260, add in 143, subtract out 65. It better be 338. That's how you know your dividends are correct. Okay? All right, so I'm going to erase now. That was the more difficult. The dividends, they didn't give it to us. They made us figure out that missing piece. That's how you will do it. All right, now we're ready. We're going to put it together. So now we have financing activities. And we have issued long-term debt. And that is 39. Then we issued capital stock. Remember, we found those changes before. We issued capital stock. That was positive 65. We just went through. We figured out dividends paid. Remember, this is going to be a negative number. Dividends paid is in the financing. That's negative. And then we total it down. Net cash provided by financing $39 plus 65 minus 65 gives me 39. Okay, and that's a positive number, 39. So that's how you do the financing section of that particular problem. Okay? All right, see you soon. Get in, do that homework.